We've got a lot to cover in the world of stocks and finance, but first, let's dive into the biggest story-making headlines right now. The ongoing conflict in the Middle East has led to a significant disruption in global oil supplies, with the Strait of Hormuz remaining closed due to a U.S. naval blockade. This critical waterway is responsible for about a fifth of the world's oil and liquefied natural gas transit, and its closure is exacerbating the global energy crisis. As a result, Persian Gulf oil producers have been forced to cut production by roughly 6% due to local storage facilities reaching capacity. The International Energy Agency estimates that about 13 million barrels per day of global oil supply has been shuttered by the conflict and the closure of the Strait of Hormuz. Furthermore, over 80 energy facilities have been damaged during the conflict, with a recovery potentially taking up to 2 years. In an attempt to mitigate the effects, OPEC Plus announced plans to boost its crude output by 206,000 barrels per day in May. However, given the current production cuts in the Middle East due to the war, it's unclear whether this increase will materialize. The U.S. has also seen a slight decrease in crude oil production, with the number of active oil rigs falling to 407, just above the 4.25-year low. The impact on the global economy is significant, with oil prices remaining elevated and fuel shortages becoming increasingly common. As the situation continues to unfold, investors are keeping a close eye on the developments, trying to gauge the potential effects on their portfolios. We'll be monitoring the situation closely and providing updates as more information becomes available. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're continuing our discussion on the latest developments in the business world. Today, we're focusing on General Motors and their recent announcement regarding tariff refunds. The company has raised its guidance for the full year, expecting approximately $500 million in tariff-related refunds following a U.S. Supreme Court ruling that deemed certain tariffs imposed by President Donald Trump as unconstitutional. This decision has significant implications for GM, as well as other automakers who have been impacted by these tariffs. The refund is expected to be a welcome boost to GM's bottom line, and the company has adjusted its earnings guidance accordingly. However, it's worth noting that the timing of these refunds is still uncertain, and GM's CFO Paul Jacobson has emphasized that the company is taking a prudent approach in its planning. The tariffs have been a major challenge for the automotive industry, with many companies facing significant costs and disruptions to their supply chains. While this refund is certainly good news for GM, it's also important to consider the broader context and the ongoing uncertainty surrounding trade policies. In addition to the tariff refunds, GM has also been navigating the challenges of the electric vehicle market. The company has adjusted its EV strategy in response to slumping demand and shifting taxation policies. This includes a $1 billion charge related to contract cancellations and supplier commercial claims. As we consider the implications of these developments, it's clear that GM is taking a careful and strategic approach to managing its risks and opportunities. The company's focus on improving EV profitability and scaling its business will be crucial in the face of ongoing market uncertainty. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at some of the latest developments in the world of finance. We've got a couple of interesting stories to share with you, starting with Berkshire Hathaway's recent earnings report. The conglomerate posted a mixed performance, falling short of Wall Street's expectations with a diluted EPS of $4.73, missing the consensus analyst estimate of $5.19. Total revenue also came in below anticipated levels, reaching $94.23 billion instead of the expected $102.89 billion. Now, it's worth noting that despite this softness, Berkshire's net income remained relatively stable at $19.2 billion, thanks to $13.5 billion in investment gains. However, the company did take a significant $8.26 billion impairment charge on major investments, including Kraft Heinz and Occidental Petroleum. CEO Greg Abel has signaled a more active phase for the company, focusing on operational efficiency and strategic capital deployment. In other news, we've been following the story of Bill Ackman's Pershing Square and its investment in Universal Music Group. The hedge fund has taken a significant stake in the music giant, and it'll be interesting to see how this plays out. We'll keep an eye on this development and bring you updates as more information becomes available. We're also keeping tabs on the latest moves by Warren Buffett's protege, Bill Gates' investing partner, and other influential figures in the world of finance. It's always fascinating to see how these leaders navigate the complex landscape of global markets and make informed decisions about their investments. On a separate note, we've been tracking the progress of billionaire investor Peter Thiel's Founders Fund and its investments in various tech startups. The fund has made some savvy bets on emerging companies, and it'll be interesting to see how these investments pan out in the long run. In conclusion, it's been an eventful week in the world of finance, with plenty of news and developments to keep us on our toes. As always, we recommend that our listeners stay informed, do their own research, and consult with financial experts before making any investment decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.